Okay, let's go ahead and begin. I see a lot of friends, familiar faces out there. Good morning. I'm Ray Mattis, President and CEO of Retail Alliance. Happy holidays, Happy New Year. I think we see the light at the end of the tunnel during these crazy times as it relates to the pandemic. We wanted to take this opportunity to give our membership an update on some of the governor announcements, as well as the PPP loan process. So today we have with us Misty Leinberger with Pixtel Accounting. We also have Kate Baker, our Chief Lobbyist for the Virginia Retail Federation. And then Kylie Seibert will be joining us to provide some Retail Alliance updates. So let's begin with Kate Baker. Kate, if you could walk us through some of the guidelines and some of the issues that are related to the pandemic.
Hey, everybody. Thank you for joining today. Obviously, there's been a lot going on in the government affairs world, and it's been quite crazy the past several weeks, and especially yesterday. So I wanted to give a little update. We start session next week for Virginia General Assembly. And we're expecting to see several issues that will impact our members introduced. They have not hit the system yet, so we're still waiting to see exactly what they look like, but we'll most likely see legislation on paid leave. We'll most likely see legislation on right to work has entered the system with Delegate Carter. There will probably be legislation dealing with immunity from civil claims on COVID for employers. That was an issue that was dealt with somewhat during the special session, but it never passed because both sides couldn't agree on what that needed to look like. We've heard rumors that there will be legislation on hazard pay for COVID-19 and employees that are essential workers that are having to work and during COVID-19. There will be tax issues, which Misty can talk more about, but conformity to the federal tax code with regard to PPP forgiveness. And then I'm sure that we will see more employer mandates. That's just a few of the issues that we're expecting to see. Next week, when it begins, more of this stuff will actually hit the system, and we will be sending out our weekly reports from Virginia Retail Federation to all of our members. There will be an explanation of some of the major bills, and then the entire bill list will be in there as well, so you can kind of go through that. And if you've got any questions, please feel free to reach out to me. Another thing that's going on right now with regard to the pandemic is the emergency temporary standard is now most likely going to become a permanent standard dealing with COVID-19. They had public testimony that for Vosh and Dolly on this earlier this week. We testified against the proposed permanent standard, highlighted the fact that the science is changing every day, and both OSHA and the CDC are changing what is required pretty frequently. And if you put something in regulations that's permanent, it's more difficult for that to change, and you're going to be having to comply with something that's based on outdated science. So we recommended that they just extend it for another 6 months until the end of the emergency order by the governor. I highly doubt that that's going to happen, but that is what our recommendations were on that. The vote on that, I believe, will be next Tuesday, the day before session starts. And then the next thing that I wanted to talk about was the vaccine. The governor had a press conference yesterday, laid out the levels of who's getting the vaccine when in the first round. So there's going to be A, which is we're in right now, then 1B, and then 1C. We will be sending out that press release from the governor that lays this out probably tomorrow, just giving things a chance to die down with everything else that's going on. We didn't want that to get lost in your inboxes with all the other stuff that's out there on the political front. So if anybody has any questions, please let me know. I'm available.
Kate, can you explain to the group the letter that you've sent,
Oh, yeah.
the vaccine as far as retailers and where they fall into the line after our first responders?
Yes. So we submitted a letter to the Commissioner of Health earlier this week requesting that all retail be considered essential to protect not only our employees, but also customers. We feel like retail is a frontline industry and is dealing with customers, in person. There's no way to work virtually. So we sent a letter requesting that all retail be considered part of that first portion of vaccines. Based on the governor's press conference yesterday, it looks like grocery stores will be in that 1B. And then food processing will be in that 1B. And then 1C, it looks like it'll be food services. So that would be our restaurants and stuff. So a portion of those that we represent will be considered in the essential frontline worker. It's not surprising that it's based on the food industry. That is kind of where we thought that they would go with it, but we did want to request that all retail be considered part of that.
And I just want to emphasize, we're not promoting or we're not advocating that we jump in front of the medical
No,
line or
no.
It's just in
Yes. So they're already, the first round was medical, and then it was first responders, and it was clear in our letter that that is not what our intent is. Our intent is when you get to the essential workers and the frontline workers that are essential other than healthcare and first responders, that we are hopeful that retail can be included.
Are there any questions, Joey, in the chat room or?
We don't have anything in the chat right now, Ray.
Okay. Kate, I hate to throw you this curveball, but can you just maybe just highlight some of the top 5 issues we're going to be looking at the General Assembly?
Well, paid leave, like I said earlier, would be one of them. What that looks like, we're still waiting to see. It could be, 12 weeks of mandated paid leave would be one of the bills. There could be an insurance program bill with regard to paid leave. There could be a study. We're going to see multiple different issues. Minimum wage goes up in May. There is some talk about some people putting in a delay in that minimum wage increase bill. I don't know that would go anywhere, but we would be supportive of that just because going up to $9.50 in this time is probably going to be difficult for a lot of our members. And then again, it goes up in May to $9.50, and then it goes up to $11 January 1 of 2022. So you'd have another increase within 6 months. The right to work, that was a big deal last year. It wasn't successful, so I'm sure there'll be a full court press on that. Something that doesn't deal with our members, but is going to be a major issue is the governor's already said the legalization of marijuana. That will be one of the top issues that they deal with during this session. This session is going to be extremely shorter than normal. It's only going to be 30 days. So it will be virtual in 30 days, and it will be insane. We will be testifying via Zoom, just like I'm doing right now. Our action alerts will be going out probably weekly, if I had to guess. And those are extremely, extremely important for our members to respond to. It's effective, and it will be even more effective when we are not able to meet with these legislators in person for them to hear from y'all. So please, if you see them, please respond to them.
If you could also touch on the unemployment. We had a member of ours, or actually serves on the Retail Alliance board, that I believe had to lay some people off. He owns 3 restaurants, and he just got hit with a huge unemployment
So
bill.
the goal of what the governor did was to freeze the unemployment rates and not for it to increase. So that was surprising to hear that happened. And we're looking into that more about where they've frozen the unemployment and trying to figure out how to handle that situation.
Okay, good. So for those of you out there, if you do get your unemployment insurance and it's gone up greatly, I think his went up to like $8,000. What was it, a quarter, Kate?
I think that's what he said.
Yeah, which is extremely high. Questions, Joey? I see
Yes, we have a couple questions in the chat. Misty wants to know, has there been any guidance on how the pandemic unemployment will affect employers in terms of their unemployment rates / costs?
So that the governor issued an executive order earlier in December on that, and we sent an email out highlighting what he issued. I'm happy to share that with you, Misty. Is there
Great.
anything else?
And then Pam said that she contacted her payroll services after the call and her rate was reduced over a previous year.
Which is, I think, what the intent of what the governor did. That was one of the big issues. It was one of the big things that the Secretary of Commerce and Trade has been pushing for this entire pandemic. That was one of his big initiatives, was to make sure that unemployment insurance rates did not go up. So we will look into that issue.
Okay. Do we have any other questions? Good. Well, thank you very much, Kate. Thank you for carrying our baton for us. I know that the next month is going to be crazy. I hope you're going to be able to get in front of some of the legislators and lay out our concerns and protect the second highest employer in the state of Virginia, of course, that being retail.
Yep.
With that, we're going to turn over to Misty Leinberger. Misty, welcome back. I know you've had a big reprieve during the holidays. You look well rested and ready to tackle the tax season. So I'm going to turn it over to you.
Great. And I'm going to go ahead and share my screen. Thanks to Kylie, who offered up some slides yesterday. It helped me get these things together a lot faster.
You're welcome.
That was big. I was probably 50% through. Okay. Okay. All right.
Do I need to stop sharing for you to share?
I think we're good. There we go. Okay. There we go. All right. It's just been a while. So, okay. So there's actually quite a lot going on. Clearly, we've been calling it COVID-19 Take 2 or PPP2 or something along those lines. So what does it all mean? Let me see if I can get to the next slide. There we go. Okay, so one of the first things they did is they capped it at $2 million. You can't get more than that. Honestly, that's a lot of money. And none of the clients that I actually work with in our small business community really qualify for a $2 million PPP loan. It is absolutely fully forgivable as long as you spend it on forgivable expenses. So one of the things you have to remember is that there were some things that you could spend the money on using the PPP money, but it was not necessarily forgivable. For example, a mortgage payment. So the interest of the mortgage payment was forgivable. The mortgage payment itself, although an acceptable use of the PPP money, was not forgivable. And everybody that I've worked with has basically avoided putting money into anything that was not forgivable. So everybody's done a really great job in terms of that. The payoff terms haven't really changed. I know that says $1, but it's supposed to say 1% over 2 years or 24 months. Now, that payoff, though, doesn't start until you have actually applied for forgiveness and it has been accepted. One of the things they were starting to run into is that people were going to have to start making payments on these PPP loans. And so this was something that they had fixed early on. So now it doesn't happen until you have filed or applied and received forgiveness. And you have to apply right now. I don't think this has changed, but you have to apply for forgiveness 10 months from the point of the end of your covered period. So basically either 8 months or 8 weeks or 24 weeks, whichever one of those you wind up using. you have to apply for forgiveness. And theoretically, those funds have been exhausted by the end of that covered period. Now, who can apply? Well, almost everybody. So first of all, people who never applied for the first round of PPP loans can apply for this round, and the same rules apply to them as with the first one, which means that they had 500 or fewer employees, or if you were a 501c6 organization, you had 300 or fewer employees. So pretty much the same deal there. Now, if you're one of those people who was offered a PPP for a certain amount and said, no, I don't need that much, or for some reason you don't feel it was calculated correctly and you have not applied for forgiveness, you can go back to your bank and amend your application to get the rest of the money you think you should have received for the first PPP loan. Now, if you are a business that had a first PPP loan and you've exhausted your PPP funds on those, and you have fewer than 300 employees, so they're changing the rules a little bit for the second round for people applying for a second loan, then you can apply for the second one. The other thing that you have to watch out for is that you have to show a 25% decrease in gross receipts in any quarter of 2020 and as compared to the same quarter in 2019. So you can pick quarter, like you can look through all of your quarters and you can pick the one that actually has a 25% decrease in gross receipts as opposed to the 2019 quarter. And of course, you get a lot of questions as to, well, what if I wasn't in business for 2019 or even all of 2019? Well, they have made some modifications in order to do that. Now, you do have to have been in business by February 15th of 2020. So that's something that you need to be aware of. However, if you were not in business for the entire year of 2019, they have these rules that we can follow. So for example, if you were only in business for quarter 3 and quarter 4, you can compare any quarter of 2020 to either quarter 3 or quarter 4 of 2019. So you could compare quarter 1 to your quarter 3 of or quarter 4 of 2019. It's the same deal if you were only in business for quarter 4 of 2019. If you were not in business in 2019 at all, your second, third, and fourth quarters will be compared to quarter 1 of 2020. So that's how they're going to work that. And again, this is only going to work if you were in business by February 15th of 2020. All right, so we're capped at $2 million. And for the most part, they're calculating it almost exactly the same. It's going to be your average payroll over 12 months multiplied by 2.5, unless you are a NAICS code 72 business, which basically encompasses mostly food services. And then it's not 2.5 times, it's 3.5 times your monthly average. So this is a great thing, since especially given how the food service industry has been affected in all of this. All right, so the expenses that qualify, it is still a 60-40 split, which means you still have to spend at least 64% of this on payroll expenses. And those payroll expenses are salaries, sick time, vacation time, most benefits like healthcare and retirement benefits, as well as your state and local payroll taxes. There's a whole slew of them in there. If you really want the details on each and everything, feel free, give me a call or an email. I'll certainly get you that list. Now, there are a couple of other hairs that they've split with the second wave as well. So for example, if you are an owner employee, but you're not on payroll because there's just no money to put you on payroll, you can still get some PPP funds for that, but it doesn't matter what NAICS code you are. It's going to be based on the net profit of your company over the last 12 months. And then what that average net profit is per month multiplied by 2.5. And then and it's also going to be capped depending on whether or not you're an 8-month or an 8-week or a 24-week covered period. And then the self-employed with no employees, it's the same calculation where they're going to average your net profit. and then multiply that by 2.5. And then that's capped at $20,833. Now, for a lot of self-employed who can only show losses, it's very frustrating because they are basing it on net profit, and I haven't seen any wiggle room on that. So if you're a company who is experiencing net losses, it's going to be pretty difficult for you to get your hands on the PPP loan. So just be aware of that. One other thing that I want to mention that I'm not sure I mentioned anywhere else in the slide is that if you are a company that is going into bankruptcy, it does not preclude you from applying from these loans. You may still qualify to apply for these loans. So that's just something to keep in mind. I am currently working with 3 clients that are in the middle of bankruptcy as a direct result of what COVID did for them. And we're still working on getting this COVID relief for them because it could save them. It could help keep people employed and maybe even pull them out. So just something to keep in mind that if you are in that situation. Okay, so expenses that are going to be fully forgiven are things like payroll, utilities, rent, mortgage interest on business properties. And I want to point that out because a lot of people called and said, I work out of my home. Can I pay my house's mortgage interest with this? No, you can't do that. Operations expenditures, which is a little bit different because last time they did this, they didn't really include a lot of these in there, but a lot of cloud computing, software and technology costs, HR costs, accounting needs are all going to be considered forgivable qualified expenses for the new PPP loan. Property damage, if your property, and we know that happened to our Virginia Beach, Norfolk, Portsmouth, if you experienced property damage, your business did, as a result of the looters and the rioters, and you need to use this money on that, you can. Just remember it has to stay within the 40% because it still has to be 60% payroll. Suppliers. So this was not something that was very clear during the first one. And for example, restaurants, they absolutely need to have food supplies in order to have a product to sell. So there are a lot of cases where in order to run your business, you have to buy these supplies, then those are going to be included on what can be a forgiven expense. And then of course, there were a lot of expenditures made in order to keep workers protected and to follow the rules set forth by the state of Virginia to make sure that you were following the COVID-19 safety requirements. Those expenses will also be considered a forgivable expense. And of course, you guys want to make sure you're documenting everything. All right, so here are the things that have been fixed that I'm particularly excited about. And the really big one is the IRS initially came out with guidance that said, well, Congress didn't address this. We have to go by the rules we have. If you spend your PPP funds or your EIDL grant on these expenses, then you cannot deduct them for tax purposes, which basically undermined the entire non-taxable, non-reported quality of the PPP forgiveness. Well, they said, yeah, oops, we forgot about that. We're going to fix that. You guys can deduct the expenses on which you spend those funds. So that is a huge win. It was actually going to force some people into a profit situation and not be able to pay the taxes because they didn't have the money for it. So super happy there. The other thing is that forgiveness was initially going to be reduced by the amount of the EIDL grant you received. So if you received $10,000 and you had a $10,000 PPP loan, well, you were going to be paying the entire $10,000 back. It no longer reduces that. The banks are so happy about this. I receive dozens of emails from bankers that I work with in the area because they don't have to take this into account anymore. Now, if you have already applied for forgiveness and received it, the SBA has to treat everybody equally. So if you've already applied and received it and you still have this balance sitting out there because of the EIDL grant, call your banks and see what you need to do in order to make sure that that is fixed. I'm not quite sure what they mean by, treat everybody equally. My assumption is that you all are not going to have those PPP forgivenesses reduced. So you should be able to get that reversed. Still trying to figure out how the mechanics of that are going to work. Now, the other thing, Weeks and weeks and weeks ago, they said, okay, if you have a PPP loan of $50,000 or less, you're going to qualify to do this super simple application. And you didn't have to calculate FTEs. You just basically have to kind of certify that you have all of your documents there and that you didn't reduce your salaries by 25% or more. It's a 5-minute application. They have increased that amount up to $150,000, which encompasses all but one person, one business I'm currently working with. So this is amazing, and it's just so much faster. Now, that doesn't mean don't document. Just because they aren't necessarily going to make you provide the documents, the SBA can audit you for up to 5 years after the forgiveness and the payoff of your loan. So keep those documents somewhere where if it happens, you can hand it to them. One way a lot of businesses have fixed this problem is they just made sure to spend everything on payroll. So all they do is provide some payroll reports. That's been a very simple solution to a lot of things. It's certainly one of the recommendations I've been making, but just make sure you're saving all of that paperwork. The other thing is the employee retention credit could not be used in conjunction with the PPP. Now it can. And they've increased the amount that you can actually get as a credit to $14,000 from $10,000. And it's 70% per employee. Okay, by the way, this is all per employee. And it's 70% of the gross rather than just 50% of the gross. So they've increased some stuff. This is going to be available through July 31st of 2021. I do not know how that affects people retroactively, if at all, because with the first round, you couldn't use these in conjunction. Now they're saying you can. I'm actually relying heavily on payroll companies to be the experts on the employee retention credit. So I will actually be interviewing somebody who is in the payroll industry and an expert on this here pretty soon. And I'll be putting a video out on that to answer these specific questions. Now the EIDL, now the grants are available again, but there are restrictions. And restriction number 1 is that you have to show a 30% economic loss from the previous year, which means basically your net profit is 30% less than what it was in 2019, okay? The other thing is that you have to have 300 or fewer employees. But then the other thing that it is, I think one of the really key points here is that you have to be located in a low income community. And I believe there are maps out there that show you whether or not you are operating in a low income community. I'm sure the SBA is getting all kinds of questions. I am going to be researching that further just to make sure that I understand exactly what that means. But apparently there are some maps out there. I think I've seen the NFIB put out some maps that show where you're at. You can still apply for the EIDL itself through the SBA site, and those applications are going to end on December 31st, 2021. So if you think you need one, then you need to go through the SBA site before December 31st of this year. So it seems like we have a lot of time, but then last year flew by so fast. I'm not sure. I wouldn't wait, because we also don't know how long they're going to be available. Just because you can apply clear through December 31st doesn't mean that the funds are going to be available clear through December 31st. So another thing to keep in mind, again, if you are a business, a for-profit business, it's 3.75% over 30 years. And for nonprofits, it's 2.75%. So and it's fixed. These are the lowest you're ever going to get out of the SBA. And it's not a bad safety net to have, just because of the uncertainty kind of moving forward and just how long it's going to take to get this vaccine out and get things back to normal. Now, there's one little quirk in all of this that's a little strange. One of these things isn't like the other, and it's this little tax break that we're getting. It was really important for them to get this in there. Meals for businesses for the year of 2021 and 2022 are going to be 100% tax deductible. Now, most meals under normal circumstances are only 50% tax deductible, but now all meals are 100% tax deductible, provided that they are for legitimate business reasons, which again is all going to come down to documentation, and 2, that they are purchased from restaurants. So don't go to the grocery store and buy some food and then think that's 100% tax deductible. You have to purchase it from a restaurant in order for it to be 100% tax deductible. Everything else is still going to be 50% tax deductible. All right. There's my contact information if anybody needs to get in touch with me. It looks like I have some questions here in the chat. Didn't apply for PPP for our LLC formed January 2020 because 2019 revenue was zero. Am I correct that the LLC does not qualify? And the answer to that question is it depends. Do you have employees? Do you have no employees? What does your profit look like for the last 12 months? You could qualify, but there are some unanswered questions there that we would have to dig into before I could answer that question. And yes, I do have the slides for this, and I'll put it in the chat right now. And there you go. So there are the slides. And again, my contact information is in there. I will talk to you. Don't worry about getting charged. I'm not going to charge you for talking to me. I want to make sure you guys all get all of the information that you need and that you do it correctly and that we maximize this to the best of our ability. So if you have any other questions, let me know, everybody. But thanks to Retail Alliance for helping me keep you all in the know.
Thank you, Misty. So I guess the meals, that's the martini rule too?
Yeah. No entertainment, and martinis fall under entertainment, unfortunately.
Okay. The second thing is that is the PPP, once that amount has been forgiven, that is still a taxable amount of income, correct?
No, the PPP is not taxable, which is why when they took the expenses away from us, it completely undermined the point because it essentially made the PPP taxable. Now that we can claim those expenses, it is a fully non-taxable event.
That's excellent, because the first round, they said it was taxable.
They went back and forth on that and finally settled on non-reportable income.
Okay, excellent, excellent. Are there any other questions out there, Joey, in the chat box?
Not at this time, Ray.
Okay, good. Thank you, Misty. Thank you so much. You're such a great subject matter expert when it comes to this, to get through. It can be very confusing and overwhelming at times.
Even for me. And it's my pleasure.
So now we're going to call on Kylie Seibert. She's our Vice President of Corporate Communications. I think we're also going to hear from Lisa Renee Jennings as it relates to some updated information with LUVA. So Kylie.
Hi. All right. So we have Strive webinars are continuing this year. We've got Joey and I have been working on some topics which we're very excited to be able to present. Our first one coming up on January 19, and it's presented by Casey McCoy from Create Captivate Digital Marketing, and it's on maximizing your digital footprint, which really is like going beyond just having a Facebook page or a website. There's so much more to having a digital presence. So that's really important for everyone. And we will continue down that sort of stream of marketing and social media and customer service and so on for the other topics this year. And we'll share them over the coming weeks as well, so you can plan out your calendars for the year. We also have being released today our post retail pulse survey. So we did one before Christmas, which we released on our website and through other social channels, the results to you all. And we are now doing one that was basically on what you predicted your holiday season to be like. Now we'd really like to find out how it went. So that survey will be emailed to everyone today. And we'd appreciate if you would take a few minutes to complete that. And just to incentivize you, we will once again be providing a gift card to your favorite LUVA business. We will do a drawing for that for anyone who does complete a survey. So we've had 2 winners so far for the previous surveys. I know Klaus was one of them. He's on. Congratulations, Klaus. And also La Brioche, which is just down the road from here. So very lucky people. They were able to choose their LUVA gift cards. So also we're going to send out shortly, well, actually, you may have already received it from the Virginia Retail Federation, the VRF, about a webinar, which is similar to what we've presented today from Misty. But if you'd like to hear that as well, they'll be doing a webinar on January 12th. And so if you haven't received that VRF email, we'll put it on our social sites as well and on our Facebook member group page, so you can register for that if you are interested. And that, I just want to pass over just a couple of brief updates from, also just to let you know we do have resources that have been continuing since the beginning of the coronavirus on our website. We've got a resource page dedicated to that. Reach out to any of our advisors for any questions, collaborations, any information that you may need. Again, we invite people to join us on our podcasts. They've been happening very regularly every 2 weeks. So very excited about those. So if you are interested, please let us know. And continuing our usual things, think tanks. Anytime you need any help with legislative issues, just reach out to Kate or to any of your member directors. Face masks still available. And I just wanted to share with you our CROPS program, which is such a great benefit to our members, because as a member of Retail Alliance, you are actually able to apply for a scholarship. And that's $495 it usually costs for to do the certificate in retail operations. And it's free, basically, for any member with an upfront $100 deposit that you get back if you graduate, which is a big benefit to our members to really help you with learning all the different areas of operations of a retail business. So if you know anyone who is interested, or if you're interested yourself, we have information about that on our website as well. And I just wanted to show you the calendar for that. It starts in March, and you'll see here on the left, 1 to 7 are all the topics. It's 2 weeks. Generally, there's actually, for the retail accounting, I think it's 3 weeks because it's a little bit more detailed. But you'll see there all the areas that we cover. So, and then it all wraps up with, presenting a business plan as our Shark Tank minnow bucket is on June 28th. So it doesn't take a lot of time. It's, in the evening through Zoom, and, it really is just, some homework really to get yourselves up and running and really get to know the ins and outs and create a business plan for your business, including all of these elements here. So let us know if you have any questions about that.
We might want to add, Kali, that is 100% virtual. We had facilitators. There are 10 scholarships available on the peninsula as well as on the south side. That would be a member benefit. It runs, what did you say, 14 weeks, I believe?
Yes, 14 weeks.
1 day a week.
From March to June. You'll see at the top there, 6 to 8 p.m. on Monday evenings. As you say, Ray, it's completely virtual via Zoom. So it's available to anyone. Makes it a lot easier for anyone, around the whole region and beyond to be able to do this course.
And the end goal is developing a comprehensive business plan for your business. And it's very applicable for existing retailers or some of our members that may have a manager or somebody who needs to understand retail a little bit better, as well as aspiring retailers.
Yep.
There's homework, there's testing. It's pretty comprehensive. We had some great testimonials from last year.
Yes, and we'll be sharing some of those too, just in the upcoming weeks. All right, and then I'll just pass over to Lisa Renee to give a couple of updates about Lover. Lisa Renee.
Good morning, everyone. A couple of things exciting to share with you for 2021. First up is Lava will be doing a Valentine gift guide. So if you are a local Lava business and you would like to participate, please email myself or your membership advisor, Karen or Beth, a picture, a brief description of the item, and a link on how to purchase the business. So if you have a website, that's a direct link to the item or a direct link to your website. If you don't have e-commerce, then at least include a link to your Facebook page or something so that folks can get to you, call you, see where you are so they can order the Valentine item. Entries are open now for that, and they will close on January 21st. And we will begin sharing that gift guide to Hampton Roads starting February 1. And I will also be doing some paid social media to support that gift guide as well. So looking forward to that. I think people are really keen to support local. This helps them shop from home if they want, or discover new local businesses that they may not travel to normally. So if you live in Norfolk and you want to buy something in Gloucester, they will be able to do that through this gift guide. Secondly, I want to mention that the app is getting an update as we speak. I have the beta build on my phone right now, and I've been testing it and trying to break it. The number of hearts needed to earn a reward is going to go down. So formerly you needed 10 hearts to get a reward. Now users will only need 5 hearts to get a reward. Studies show and indicate and support that we are very impatient people and we want instant gratitude. So with loyalty rewards programs, folks want to earn those rewards faster. So we're making that change. We've been letting our businesses know through email and through face-to-face. And again, if you want to change your reward, just email me or let your membership advisors know. It's a quick, easy change for us. And while you're at it, if you want to update a photo that you have in the app or any other information, we're happy to do that for you as well. So again, I don't have an exact hard date when this is happening. We're working on it as we speak, but the rewards will go faster for folks and give them rewards and encourage them to shop local more. They'll be rewarded more for shopping local. Any questions for me on either of those items?
No, I don't think so. Thank you,
Okay.
Renee. Are there any chats, anything in the chat box, Joey?
No, just Pamela had a question for Misty, but I think Misty got it answered for her. So Pamela, if you have any issues, just let us know.
Well, with that, I think this concludes, I want to say it's about our 28th COVID-19 briefing. Thank both Misty as well as Kate Baker for joining us this morning. As more information comes in, we will conduct future COVID-19 briefings, so please pay attention to our emails that are sent out. And with that, be safe, be well. Keep in mind, we are just about through this pandemic and this crazy time. So look forward to talking to you and seeing you in the future.